Hi, welcome to Money Matters TV. We have a great show today. We're going to be joined by my co-host, Jim Grory from Drucker and Scicchetti, and then by Hustine Mitchell from CAANE. He's known as the Sugar Man, so I look forward to chatting with him soon. It's good to see you, Jim.
Great to see you, Patty. How are you?
Good. So it's getting to the end of the year.
Yep.
So we should probably talk about tax preparation, how to be ready.
Yeah, it's Patty. As we head into the end of the year, it's important that that individuals and businesses start to think about tax planning because measures that they take now could really help them reduce their tax liability and help them with their finances.
Now, what about, I know for myself, my bookkeeper tells me, oh, you have $40,000 in cash. And I think, no, I don't. I thought I spent all that. I'm trying to, get my books as close to zero as possible. I don't have actual cash. There are things that weren't deductible. Is there anything you can do with things like that?
Patty, when you think about tax planning, the concept is making decisions or putting things in place that that they sort of make sense from a financial perspective. There's often a saying, you don't let the tax tail wag the dog. And the reason for that is you don't want to be making decisions or I'm going to spend these things just to get a tax deduction. So it all depends in a business what, pardon me, accounting method you're on. So if you're on a cash basis or accrual basis, it all depends upon what you're going to do as far as either recognizing income now, deferring deductions, and making those types of decisions.
Wow. So what is a good way to pre-plan? Are there things that you should think about putting your money into? I know some people do donations. Well,
they do. So individuals, if a lot of it is you need to step back and think, well, what type of year am I having? If you're having, and I'm going to bring it back to a business first. If the business is doing really, really well, and it's got a lot of income this year, and also you really need to look at what's happening in tax rates. So we're in an election season where you have two different candidates that have two different ideas of what tax rates should be and who should be paying taxes. So hopefully when you do get some sort of clarity as where tax rates are going, if tax rates are going to go up, well, you don't want to be recognizing that income in the future. You want to be recognizing the income now when the tax rates are low. So in that type of situation, you would be trying to collect any money you have on the street, if you will. If clients aren't paying, you try to get them to pay this year. If you think tax rates are going to go down, then you want to postpone. You want to postpone that income till the future.
So tell me, we obviously don't know who the president is yet.
Right.
But do you think if it goes Republican, it'll go down or up, and Democrat vice versa? As
far as tax rates?
Yeah.
You would think that that's the conventional thinking is that Republicans would prefer tax rates to be lower and Democrats tax rates to be higher. But that hasn't been the case all along. I would say that the rates have been, for individuals, the highest rate right now is 39.6. The one candidate, they're recommending that the individual rate go up to, I think, almost 43 or something like that. So, but it would be for a much higher bracket. So
that's a lot of tax money.
It is a lot of tax money. Wow. But again, it's as far as from when you're doing planning, you really need to look at what if you do need to accelerate deductions. So you would prepay bills now. So if I had rent or marketing expenses or anything like that normally wouldn't be due right now, if I want to get deductions, I would prepay them now.
So they don't have to take it out of your checking account as long as you've written the checks and have it in your books, you're good.
That's on a cash basis taxpayer.
Yeah.
If you write the checks and mail the checks, and they always say, "Oh, the check's in the mail." If you mail the checks, then you do get the deduction now.
That's good to know.
Yeah.
I have to speak to my accountant about that before it gets too close.
Right.
Yeah.
So so you have business rates or business issues, and then you've got individual issues. So many times individuals they'll want to maybe at the end of the year make charitable contributions. I would avoid making charitable contributions of cash, like large cash contributions. If you do have a stock portfolio, I would contribute like the long-term capital gain stock.
Why not cash? You want people to donate actual stock.
If someone has appreciated stock and they donate the stock and it's held long term, they will get a fair market value deduction for the contribution of the stock. Otherwise, so say if you had someone they would sell that stock, they would pay tax on the gain and then give the cash away. By giving the appreciated stock, you avoid having to pay tax on the gain.
Okay.
And you get a fair market value contribution. So it's a double win.
That's good to know.
It's so many people don't know that, and I've heard horror stories where advisors will tell me that they picked up clients because a former advisor never advised the client on that. So
we had an art appraiser here a few weeks ago, and he said the same thing. Better to donate the art, and you get the tax value of the art as opposed to selling the art and then donating the cash.
Right.
Yeah, so that was really interesting. Those aren't things I think about.
You don't never think about. People think that everyone thinks tax. They think I have to write the check. So
yeah.
Another thing to contemplate is as you're focusing on your taxes is your retirement plans. So if you're in a 401k or you have an IRA or retirement plans, like fund them as much as you can.
You have until April 15th to fund a lot of those things, right? Into the following year.
There are so many different rules. An IRA you can fund by April 15th. If you are a sole a business owner where you're a proprietor, you can set up what is called a SEP IRA. It's a self-employed plan IRA. You can set that up and fund that by the time you file your tax return, which could be as late as October.
Oh wow, that's good information for.
But there's all different rules. There's in the retirement plan area. There's all different rules as far as whether you could get a deduction for the contribution or not. So sometimes you can. We still recommend to clients even if they can't get an IRA deduction, to still fund the IRA so that the monies will grow in the IRA tax-free.
That's good to know. So one more thing. I know maybe it's a little bit late this year for people to start planning appropriately, but next year, when is the best time to start planning for end of year?
I would think, Patty, that you should be thinking about your tax planning year round, especially getting your records in order, looking at like how you are keeping record of your income that you're earning and the deductions, the things that you're spending. If you're making charitable contributions during the year, make sure you get the letters from the charities that say thank you for your contribution, and that there were no goods and services received in exchange for your contribution. So tax planning shouldn't be a once a year, end of year thing. It really should be that you could be doing it throughout the year.
I know this might not be your area of expertise, but I have a design firm, and we got notification from one of our clients about a tax issue, and the government changed. They passed Act 84 in the middle of the year. So around August 1st, they changed the tax law that certain services could be taxable. Do you know anything about that?
That may be a state and local sales tax issue.
Yeah.
That every year it seems that depending upon the budget for the state, they will make certain changes to the tax laws. For instance, I know there was a proposal that they wanted to tax accounting services and tax preparation services. So the fact that
you guys got away with it.
We got away with it. We had good lobbyists.
Yeah.
But the fact that now design services are taxable, and so was probably a law change this year.
And it's strange to me that they didn't send me a letter. I just heard it through the grapevine.
That's a shame. Yeah.
Yeah. So then you'll get penalized with the taxes later.
You'll get. I think a penalty will be assessed, but you do have reasonable cause to sort of ask for the penalty to be waived.
If they see the show, they'll know I'm lying. But
I think your accountant will be able to handle that for you.
Yeah, well, that's good to know.
Because it's a new law. You weren't aware of it. I would say 5 years from now, it would be a little bit harder to get out of the penalty.
Okay.
Yeah.
Good.
Great.
Well, I have a question for you. This is from Donald Gates from Ardmore, and he asks, what is a stretch IRA? And I have no idea what that is either. So
yeah, that's a very good question. The concept of a stretch IRA comes into play with required minimum distributions. So someone who is over age 70 and a half and they have an IRA account, they're required by the government to start to draw on that IRA account. You can't leave the money in forever. So depending upon, so once you turn age 70 and a half, you have to go to the IRS tables and look at it's almost a formula that they want you to they pull out every year. The concept of the stretch IRA is that I'm going to say, for the most part, people think, oh, I'm married, I'm going to leave my IRA to my spouse. Now, your spouse, when she inherits the IRA from you, she's going to go to those tables and figure out how much she should withdraw. Well, her life expectancy would be very much similar to yours. So the concept of the stretch IRA is you leave your IRA to either a child or a grandchild, so that when you pass, then when they have to pull the money out, their life expectancy is a lot longer than yours. So, and as long as they just pull out the required minimum amount, that IRA can grow and grow and grow and really last a long time.
So that's creating wealth for families.
It's creating wealth. It's absolutely creating wealth for families. Now, there's a proposal in Congress right now to eliminate the concept of the stretch IRA, and they're almost, the rule that I've seen is they want you to take that IRA that you inherit, that you're going to have to take out all the money out after 5 years. So there's not that ability to do that long lifetime stretch.
Do you start the stretch IRA now, or is it something that you convert later?
It's a concept of who you're leaving. So what you would do now is you would name your beneficiaries as your children or grandchildren. Mm-hmm. So it really only comes into play after you pass.
So if your spouse is the same age as you and you think they're as unhealthy as you are,
right,
then, and you have kids, it's nice to leave it to your kids.
Their kids or grandkids even.
Yeah. That's good to know.
Yeah.
So if you have questions you want answered, here's how to send them in.
You can have your questions answered on Money Matters. Please go to our website, money-matterstv.com. On our homepage, click on the banner on the right that says, Send us your questions. While you're on our website, you can find information about our host and guests, as well as show notes and links about this show and past shows. Money Matters is also available as a podcast on iTunes and Stitcher, so you can listen to Money Matters while you're on the go. That website address, again, is money, M-O-N-E-Y, -matters, M-A-T-T-E-R-S, TV.com.
Welcome back. So we're going to introduce our guest, Hustine Mitchell from CAANE. He's known as the Sugar Man, and he has a really fascinating middle name.
Hustine Alexandrovich.
That's a great name.
Thank you.
Love it. It's Colombian?
No, I actually made it up myself. So my birth name is actually Justin Alexander Mitchell, and probably about a year ago, I converted my first name from Justin to Hustine, or Hustino. And that really became sort of me becoming a character in a way, and becoming a branding element for the business itself. When I go into some place now, people greet it loud and they go, Hustino! So it's a different way of expressing myself and having people to remember me easier.
And you also have the nickname the Sugar Man, right?
And the Sugar Man is always an easy one, correct.
Yeah. How did you get that one?
So I am currently a sugar importer. There aren't many of us out there, but it's a really exciting time for us in developing the business. I've been working for the feasibility of it for about 3 years at this point. And what we're doing is we're shifting sugar from a commodity, to which we typically know it as now, into a specialty ingredient. And with that, there's a lot of changes that are happening. So you're talking about the Dominoes in the world, the sugar and the Rawls, where those are highly processed, GMO, high-yield sugars. The shift that we're looking at right now is we're going in Colombia. We're farmer direct or indigenous direct, and we're working with 32 different varietals of handmade sugars. Each one of these sugars have naturally occurring flavor profiles, which in these highly refined sugars have been essentially totally eliminated. So we're enabling the natural flavor profiles and accentuating that, going into people and saying, these are the flavors that you can use in production.
I read this book a while ago. I can't remember who it was by, but it's whenever I try and shock myself into healthy eating, I read these books and listen to blogs about sugar.
Of course.
Because I love sugar.
Of course.
And they talked about the white processed sugar, they put it through animal bones. Is that?
Well, no, that can be part of the anti-caking process, right? So that happens on occasion. But most sugars are highly processed with additives. Sulfuric acid, anti-caking agents, and the preservatives just keep going on and on.
This is where you can gross people out and get them on your product.
It is. I like to say that the cane sugar is the lesser of the two evils. I think sugar is really becoming in a lot of the news right now, and that really is a result of the high fructose corn syrup. So when people think that they're consuming sugar, on average, all the additive sugars that we're eating, sugars, I use in quotes, is typically around 80% high fructose corn syrup. And the high fructose corn syrup is what's really bad for the body, and especially in the amounts of quantities that we're actually consuming it in. Sugar is in no way good in its natural cane form, but it's nowhere near as bad as what the high fructose is.
How did you get in this business?
So my wife is Colombian, and I also own a Colombian spa in Rittenhouse Square. As a coffee enthusiast, my very first visit to Colombia, I was excited to have Colombian coffee. We were in the remote region in the interior of Colombia, and I had a cup of coffee, not expecting much, because I know that most high-quality coffee beans are exported to the American market. So typical Colombians have to have processed, dehydrated types of, or instant coffees. So I had a cup of coffee that was absolutely spectacular, and it was using natural beans. It ended up being it was made with this sugar, or served with this handmade sugar that was coming from the farm right next door. And I love to explain what this sugar did for the coffee as an enthusiast. What it is, it highlighted the fruit profile of coffee, reduced the bitter end, but added a complexity to the back end where you couldn't actually taste the sugar. You just knew that something rich was happening, but it wasn't this sharp sweetness. That sharp sweetness is what we're getting with the anti-caking and all the preservatives. Right. That's where you really get that sharp sweetness. So our sugar from cane, it has a very mild, complex sweetness that can range in profiles, anywhere from fruit-forward sugar that tastes like honey apricot, all the way to something that's more of the toasted caramel, toffee, dried figs, dried mango range, and everything in between.
Yeah. Now, not only in coffee, but I think with the explosion of the craft beer market, you're somehow you're getting involved in that as well.
Yes. So first of all, I smile going, it's really exciting. It's sugar. Yeah. There's sugar in most things. But what we really is going back is to the shifting from a commodity to a specialty ingredient with sugar. And what you have with the craft movement as far as food's concerned, everything from chocolate to beer to distilling to cheese making, it goes on with the list, is that they're stuck on a reliance of refined commercial grade sugars. And so I'm able to go to a brewer and say, this is my catalog. So our catalog is our catalog of sugars. Yeah. I currently have 8. So I'm able to go in, I'm going to say, okay, he'll taste each one, and this lager would go great with this honey profile sugar. And then a stout would go really great with this sort of toasty one. So I'm able to offer creative options that removes their reliance on these refined sugars. And you'll find that a lot of makers tend to bury the fact that it has sugar, and what we were talking about.
I didn't even know beer had sugar.
Yeah, so beer it definitely does.
Or cheese has sugar?
Cheese does not. I was thrown off on that one. But most people don't understand that wines typically do as well. So for beer, what you have with sugar, they use sugar in the beginning process. They need the sugar to convert the alcohol. So they add yeast and sugar. The sugar eats the yeast, and the result is then alcohol. They'll use that in the beginning part of the process. They'll also use it at the end. So they'll create the carbonation by putting a little bit more sugar in it to make the carbonation. They'll cap it right away, and that's how you get your carbonated beers.
That's amazing.
The thing that's really exciting about the beer market for us in particular is that our sugars have the most upfront flavor result on the final product, even though beer doesn't use that much, because they're using it for the objective of making alcohol and carbonation. People are not typically adding sugar to beer to actually affect the taste. But now they're able to say there's a logistical component where we have to add sugar, but we can also add an element of flavor complexity that makes the beer just richer and more intriguing.
That is really exciting. Is there anyone you can tell us that is using your sugar?
Cardition, so a newer brewer that's coming up. Chocolatier, Chocolate Alchemist is using us. We're about to sign with La Colombe, so super excited with that.
Awesome.
Row House Spirits, it kind of keeps going from there.
That is really exciting.
Yeah, it really is. So right now, I guess probably about a week ago, we just signed an exclusive deal with an indigenous tribe in Colombia, and we'll probably be getting their sugar in the next like 3 months. But this locks us into an incredibly complex and sugars that we've didn't have access to before at all. But it also puts the social good. So when we're talking about specialty ingredients, I'll use coffee for example, where coffee was a commodity base, it was Maxwell, it was Folgers. But now it's talking about this one guy, this one farm on this high elevation, he grew this particular coffee, and this is why it tastes this way. He's using this strain. We're doing the same thing with traceability with sugar. So we're able to say this one indigenous tribe grew this sugar, and this is the strain of sugar that they grew it, and this is the flavor. So they're able to produce a beer or a chocolate and connect it back to the Amamo and the Atawaku tribe. So there's a social value to it.
Can we buy it in the store
from you? You can't yet. I do have some available at my spa called Mi Cumbia in Rittenhouse Square. But right now we're only craft production. So we have 50-pound box bags and we have 20-pound sample bags. In the next few months, we will be getting individual serving packets. So then that will get us into the coffee market. And we're probably looking about 6 months to a year. We'll then get into the retail market where you'll be able to buy at coffee shops and grocery stores.
And will it be any different if you use it for baking?
So people go back and forth with baking. So it's interesting. Yes, cookies, I'm getting great results. It adds complexity, and overall, it's a healthier sugar. So that's the main thing. People are buying it because it's a healthier, delicious, complex sugar. On the other end, some people who bake, they say that their cakes don't rise quite as much, in all honesty.
When I make cookies with sugar in the raw, they get a little bit thin.
Exactly.
Yeah.
No, your business is a family business, I think, right?
100%. So it started by me and my wife, this a few years back, and then was starting to look for partners. I'm more of a strategy guy. I'm looking at how we can pivot, how we can develop this business, how we can do the branding, how we can be different in the marketplace. I know numbers, but I don't dream of numbers. So I always knew that in this business, I needed to have somebody that really, really owned that. And that's all they dreamt was with how the numbers could work. And worked with a few people. It didn't work in the end. And my brother at that point had just finished his executive MBA from Villanova. Presented the idea to him, and he's been on board for about 2 years now. So it's me, it's my brother, and it's my wife. And we're the founding team behind CAANE.
That's great. That's great.
Yeah. So what is your goal for the next 5 years?
That's exciting. Sugar, lots of sugar we're talking about here. So I was talking about the marketplaces. What we're saying is that every 6 months we get into a new market. Right off the bat, it's exciting because there's so many different avenues we can go. We can go all the way to sodas. We can go all the way to granola bars. So we're looking every 6 months we'll get into a new market. In those 6 years, we'll have a wide distribution based out of Philadelphia. So our warehouse is in the Alany section. We have an 8,000 square foot warehouse right now. So in that time frame, we'll be able to reach wider outside of Philadelphia, control lots of different markets, but also we'll be getting into the West Coast at that point. So the strategic thing about Colombia and its position, we can go to the east or to the west and avoid the Panama Canal. So it's one of the few countries that you can split either end, so we can easily import right into the West Coast.
So you're going to be the, not domino, but the next big.
I want to be the sugar man.
Yeah.
Yes, that's our idea, is to create the next great sugar brand. I just think it's so ripe for opportunity with so many different markets to really invent what sugar can be. And that's really what excited me about getting into this in the beginning. People are looking for technology companies. They're looking to shift all of these different elements. But if you can go and you can really update sugar so it becomes something that's more than what it used to be, and to really reinvent it, but to reinvent people's perspectives. I think in the beginning when I was telling people I was developing a sugar company, they're going, "You're crazy. People aren't using sugar anymore." Right. I'm going, that is correct. People are becoming more aware of the knowledge of why sugar is not good, which is why I'm going, it's the perfect, ripe opportunity to create a healthier new heirloom cane sugar into the marketplace. Because Americans' profile for sugar and the desire for sugar and sweetness in particular is not going to go away. And that's not necessarily a bad thing. It's just the types of sweeteners that we're currently using.
Yeah.
It's really exciting.
That's neat.
So, am I wrong? Are you an architect by training?
Yes.
In your early days?
Correct. So my undergrad was actually in sculpture. So I studied at University of the Arts. So it felt like 10 years ago at this point. Then I did a master's degree at Rhode Island School of Design. I studied interior architecture there. From grad school, I went directly working for architects, and then I had an opportunity to teach architectural lighting design class at Delaware College of Art and Design. From there, I kind of found my passion. Once again, we're sort of talking about how do you differentiate yourself in the marketplace. There's a lot of architects in the marketplace, but there aren't that many people who specialize in lighting. So I really honed in on that, did really well, and worked for 3 years in Manhattan, but lived in Philly. And I specialized in kinetic LED facades. So all of my projects were in Saudi Arabia, Dubai, a few in Germany. I was the lead project designer. So a lead project would come in and I would present the ideas for the company. We would get the job, hopefully, if I do my job well. Then it would be handed off and I would go to another. So I was really the one who was bringing work into the company with innovative projects. At that point, I had met my wife.
And then you had a cup of coffee, and then
I had a cup of coffee, and the rest is history. The rest is sweet, as we say.
So what is it like working with your brother?
It's wonderful, actually. I wouldn't imagine it any other way at this point. We have a lifetime of knowledge about each other and how we work together. He knows what I'm great at, I know what he's great at. And enables us to really have an open communication across the board. You know, if somebody's not stepping to the plate, you're able to kind of talk to them in a knowing way of what's deliverable and what works, of saying, you know, hey, I need more of this. So it gets rid of all of the sort of complications of developing a partnership. Okay, we know each other, let's just work really well together because we know that we work on different things, but we work in knowledge and in tandem with each other. And the same thing I say with my wife. It's exactly the same. I just couldn't be happier with that. On the other end, a lot of people will compliment me and my wife in starting the spa of going, a lot of times it's hard for a marriage, right? It's very hard for a relationship to be in business that long and to have it work and not have it interfere with your personal life. I think that's just something, maybe it's me, it's just inherently what I do in my forms of open communication, but the business and with my wife, and now with the sugar as well, with Todd and my wife, just couldn't be happier.
In Spanish, you're learning Spanish.
I'm trying to.
Yeah.
As I always say, I should know a lot more than I actually do.
Yeah, you've been married for a little while now, right? A few years?
Yes, I've been with my wife now for 9 years. We've been married for 3 years, and we have a daughter now who's 9 months old. Her name is Paloma, or as I call her, Palomita. At this point, as my daughter's learning Spanish, I'm learning a little bit more. So that's the process. Hopefully I'll learn it sooner than later.
Yeah. Well, thank you so much for joining us today. I know for me it was really fascinating.
It really was.
Yeah.
Excellent. I appreciate the opportunity and pleasure to meet you both.
Good. So next week, we hope you'll join us. Our guest is Robert Zielinski, Esquire, from Robert Zielinski, LLC. So we hope you'll join us again soon. Thank you.